Okay, it looks like I'm back. For whatever reason, something kind of blipped on us for whatever reason. Okay, let's put here at 23. Stock's at 22 something. What we can do with that, since there's 1 day left on it, I believe it'll let us roll that out. So what we'll do is we'll do a sequential order here. We're good to cancel, chain them together, and then do an opposite order, which we're going to roll it. We'll roll it out till February, if it'll let us. We'll buy it back. Take a slight little loss. Excuse me, and then get some theta working for us. Okay, we'll let that work. Rambus. Okay, stocks. Down 5. Okay, let's go look at the other account, the margin account. Take a look at that. See what's going on with it. I'll start up here at the top. SPX is at 500. That's pretty good. I think what we'll do is we'll try to pull profit. Since our net liquidity is only about what, 875, so it'll cost us 875 plus commission to buy this one back. So what we'll do is we'll roll it out till the 3rd week of March, which is 85. So theoretically, what we're doing here is we're buying this back at 35. We sold it at 55, so we're gonna take a $500 profit. I'm not sure exactly how long we've been in the trade, but if we started at 56, 60 days, the difference is when this rolls back around and we hit 28 days, if everything stays kosher about where it's at, from 80 to 35, we'll make, what is that, about 45 cent profit. So, that's 45. Let me calculate that. 0.45 times 25 contracts times 100. That's $1,100 just by doing this roll here and waiting. If it stays about where it's at, it possibly could. It may not. Just have to see. Just kind of, that's how I kind of manage those. Pretty simple, pretty straightforward. Okay, it looks like we got a vertical here. This one's just kind of hanging in there, so we'll just let that one work. That's not really doing too much. Okay, let's skip down here. Skip over these are just options right here. Let's go down here to the stocks and actually look at the stocks. See if what I want to do here is I want to get back out of these stocks. So what I'm doing is I want to wait till these become more swing back around, become profitable, and then I'll get back out of them. Cause see, I got 2.2 million sitting in that one. That's a lot of money just sitting there in one particular stock. So which I do have options on it. Let's go back up here to the options. What I like doing is I like pulling over from $5,000 to $10,000 profit off this account from open. So to pull 5,000 off here, you got 23,000. So if you take the 23,000 plus the 5,000 is 28,000. So if you take 5,125 divided by 28,000, that's a profit of almost 18%. Of course, there's commissions you got to take out of there. So that's pretty good profit, because you had your net liquidity plus your profit here, and that's what you actually the money that you received. I mean, it's just basic math. Okay, we just had that one iron condor filled, so we bought the one, so that's good. So what we're gonna do is we're going to take this 18% profit right here, 92 days out. We might as well go ahead and pull the profit. 92 days out. Let's usually a lot farther than I like to go out, but we'll go ahead and pull that, and what we'll do is we'll set up another. We'll create another order, and what I want to do is I want to step this back. Let's go back in February. February's let's go back to March is 57. So let's go back to March. 57 days right here. Go back to March. Let's see, 17 right here. Okay, and what I want to do is I want to. It looks like it's moving up. So ideally, the position that you want to take is you want to take what's got the most extrinsic value, which is this column here, which will be 3.62, which is 120. So I'm still right on that. And if I think it's going to bump up, I could go here, but the extrinsic value is going to get us the most bang for our buck. We're going to get the most on that. So we'll leave that right there. We'll chain those together. What chaining those together means is if I go to cancel this one, it'll cancel that one and that one. So plus also it'll run this one first, then this one second in that particular order. So let's go ahead and do it. And of course, I could bump this down where if it hit 460 or whatever. So once at that, sometimes you can get here in the middle and still buy it back, even cheaper. So and take a nicer profit. So. And usually, like on Apple and some of these ones that are really active, I mean, you've seen how quick that went through there. I mean, it bought and sold. Let's see here. Obviously, you can see where it bought it back and then sold it right again. So, I mean, it was instant quick. I mean, look, the same fill time. So, that's good. Let's look at AMD. AMD's down today, so of course let's go in there and look and see if we have any calls on it. See right here, it would have been nice if we had a call on this. See, if we had a call on it, we could have been up 35,000 today. You could have been up the reverse. We could have been up 15,000. Where what we've done is just pulled the profit from it. So what we'll do is we'll just leave that one alone. Caterpillar's up 14,000. We'll go ahead and pull that profit on that. It only makes sense to do that since it only costs us 22,000. So really and truly 22,000 plus 14,000 is 36,000. So if you take 14,500 divided by 36, that's let's see, 14,500 divided by 36,000, that's 40% profit. So we'll go ahead and get out of these. What we'll do is we'll see 90 days out. That's still a little farther than there must have been a reasoning behind me going that way. So of course you can put notes in here on everyone, but until when you first start, you may want to do that. To me, that's after I've been doing this a while, so I kind of have an idea of what's going on, or what I like to do. Of course, let's see, we can look at the extrinsic value here again for, let's say, May. No, I don't want to go May. I go March. May's too far out. Okay, and what I can do is look at the March here and see what the extrinsic value is, and you can set these columns up, and you can see that the extrinsic value 92.5. See, right on the money. As long as you're real close right there, you're gonna do pretty good, because what you're doing is selling. Extrinsic value is actually time value. So we'll go ahead and We'll buy this one back too. I always wanted to change this first. Change that. Opposite order. March 1717. I'll release this right here so to get the correct value in there. And this is see, I could change this here, but you know it's still profitable, so we'll and two, it's good to have stuff kind of staggered. So okay, 398. This is Costco. Still got 30 days left in it. This one here, I mean, like this right here, we're up 26,000 from the open of the trade on this. Okay, up 18,000 for today. I mean, it's only cost us 3,000 to buy this back. So, you know, I mean, so this one's in for about 29,000. So if you do 26,200 divided by 29,000, this will give you 90%. Made 90% on this trade if we close it out at that right there. So, I mean, that's unreal on your money. 90%. You know, until you can look at it and go in there and let's go February. We'll go March. Well, there's no March. Let's go. I don't really want to go up to May, but 29 days. I guess I can step it out till May. CSX. Yeah, I guess I can step it out till then. Okay. And two, let's go look at May and see where the extrinsic value is. See if I'm close or I'm right on the money or what. Since everything's moved, the extrinsic value is also moved. Extrinsic value is 43. See, look at the difference in the money I'm going to make from 87 cents up to that. That's a big difference. So we're going to get a net credit of 53,000, almost 54,000 in the account. I mean, this is how simple it is. Okay, Dollar General's down. This one's down. I mean, you're not going to get all of them up and going. That's like this gold here. It's an ETF, 57 days. Profit-wise, 7926 plus 1073 is, let's say, 9,000. So if you take 1,100 divided by 9,000, that's a 12% profit. Nothing wrong with that. Well, that's a good profit. You know, whatever your goal is, you know, I mean, it may bump the other way and you may be down tomorrow. So it just depends on what you want to do. Like I said, I like to try to take profit. You know, this is Home Depot. This one's up 3,900, 5,000, 57 days. I'll let those two run just a little bit longer. Micron's down. This one's up today. 16. A lot of times too, if it just depends on what goal you're looking for. Like this one here is up. It's up 16,000. Oracle. So, you know, I could take. You know, I mean, it's up 25,000 today. It could swing the other way tomorrow. So, what I'm going to do is I'm going to go ahead and pull this profit here, and what I'm going to do is I'm going to roll it out. it out to the next month, which will be right here. Okay, so theoretically, if everything stayed the same and another 30 days goes by, I'll make a 40% or 40 cent profit. For the 40 cent profit times 500 contracts times 100 is $20,000 just off of managing or moving the trade like this, rolling it out. And you can go in there and you can go in there and make sure that everything's kosher, and see I moved it out right there. So of course you get a little bump right here where it's down a little bit, but this one up here, I'll go ahead and move that out too. I might as well go ahead and pull the $5,000 profit. I mean, that's probably almost 50%. Looks like it's not going to cost that much to buy back. So, but this is I mean, it's, to me, it's just simple. It's just something I've come up with, and I like rolling them out. I mean, it's kind of like a no-brainer. I mean, you make your 5, 10, 15,000 profit, roll it out, and, go on to the next one. Rambus is down. See, this one's down. And as long as you take these $5,000, $10,000 profits here and there, you're doing pretty. I think honestly you're doing pretty good. Okay, that's about USO. See, if I'd have took a profit yesterday, I'd been up almost 40,000. But it may swing the other way. Well, let's see here. Single. As a matter of fact, this one right here is profitable. This one's $45,000 profit. So what we'll do is and a lot of times you want to open it up if you got multiples on there like that. And so what we'll do is, and we'll roll this out. Well, I'm not sure it's going to let me roll it out. Let's look at it again. Oh yeah, well I'm sorry, I looked at something else first. Very opposite order. We're at February. Let's go March 23/12. It's a call. Let's go down. Could bump that up or bump it down. Or we could leave it where it's at. We'll just go ahead and leave it where she's at. That's 43,000. Just hit the count. So, Exxon is. Oh, see, we could let that one expire. What we'll do is we'll close this one, and we'll close it and we'll roll it out till that's January. Roll it out to February. Okay. See, the reason it's not traded is I'm probably have to bump it up to a 90. And the reason being is it's because once the bigger stocks get like that, they move at 2.5 instead of single points. They'll either move at 2.5 or 5 points at a time. So that's kind of where we're at right there. Actually, it may be better to back this off and go down to 85. Yeah, I think I'll get more money here. So, but I've been doing this for a while. I enjoy doing it. And if y'all ever have any questions, you can email me, and I'll be more than happy to, try to answer them. Year to date, up 738,000. Let's go look at the winner winners chicken dinners here. Amazon's been the most profitable, 274,000 thus far. And these down here have been, some of these will swing in and out, but you can see I probably have over over all of them I've got pretty good. This one here I'm not even in anymore, so I took my profit and got out for whatever reason. So let's look back and see what I've got going on here. Amazon. See, I don't even see. We got some to sell Amazon right here. These must be the. Let's see what kind of orders I got. Let's cancel replace. What that'll do is that'll bring it up. Let me look at it and see. See, I just had it to sell it at 27 whatever February. It's nowhere near that. So 780. Actually, I need to bump this up. The market's at 808, so I need to bump it up probably till 800 or 810. Let's see. We'll look at Amazon and look at it for. Actually, I need to go March. We'll look at March and we'll see what the extrinsic value is. $810. So we'll go at 810. Say one from 27 to 32. Okay. Looks good to me. We will confirm sell that. Look at that credit there. $323,000. That's only gonna mess with 410 of our buying power effect that was affected or effected. However you say that. See, I mean, it's okay. These are orders that are just sitting there, so we'll take a look at them and see. Some of them are probably just orders that I just haven't gone over February. See, they're orders that March. Well, it's a weekly, that's why. See, all of them don't have just exactly. Let's see, we'll look at that. And AMD 13. Let's go right there. 48,000. Well, it's that simple. Well, if you need an extra 50,000 for the day, you do something like that. Pull the 50,000 out. Theoretically, you can pull that exact 50,000 out if you had no money in there in 3 days. So I mean, it's that simple. Let's see here what we got. February again. $170. Okay, the market's at 176. Probably move this up to 175. Another 37,000. Cha-ching. Google, gotta love Google. Let's see. But oops. I don't have to sequential that. Let's go February, March. Google is at 803. We're gonna do a put. Probably 805. So another $2. It does make a difference. Actually, we'll go 810. $134,000. Just like that. Let's look at Tesla. Last year made a lot of money off Tesla. A lot. Okay, 225 in March. It's at it's at 244. So we'll bump this up to 245. 250. 352,000. Just like that. And hey, in a couple days, some things may swing the other way, and you may be up 10 grand. Or I could look at it this afternoon and pull up Tesla and look at it and say, oh, look, I'm up 5 grand already. And how long has it been? 10 seconds? 15 seconds? It's crazy. People making money hand over fist. Let's take a look at this one. Mm. 12. That's a call. Sell that. Let's see. Actually, I need to back this off to 11. And let her go. 125,000. Just like that. See, year to date, $714,000. So that's not bad considering it's let's see my trading days. There's 5, 10, 11, 12, 13, 14. 14 days. And if you take 715,000 divided by 14 days, it's about 51,000 a day. Not too shabby. Well, we're in color quits there for the day. You got a bunch of running and stuff I got to do. And we will talk at you later. I'll post the next video. I'll post this video when I get a chance. And I'll post some more. Thanks. Bye.